Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, May 20th, 2020, and I am pre-recording this Trading Places Live event. Futures at this point are just slightly lower, but again, I am looking at this on Wednesday evening, so there's quite a bit of time. A lot of things can happen between Wednesday evening and Thursday morning. So we'll have to kind of keep our eyes on that, see just how things turn out in the morning, whether or not we can continue to extend the rally that we saw on Wednesday. Before I get into everything, I do want to just quickly go over the agenda. I will be going over the daily market recap for Wednesday. I'm going to get into talking technically. I want to talk about some of those consumer discretionary industry groups that had been holding the group back, but consumer discretionary has really been outperforming the S&P 500 over the last several weeks and starting to get a lot more support from some of the areas that were lagging. So the group really looks strong. I'm going to go through that. Then we'll get into scooter report, show you a little bit how I use the scooters, go through a couple earnings in the earnings spotlight, and then wrap up the show with 3 you must see. All right. Well, let me first start off by just welcoming everyone and certainly inviting you all to join me on Friday over at Earnings Beats. I'm going to have a what we call our war room. We're going to have a special on Friday at 10 a.m. Eastern, and it's going to be open to everyone. It's going to be open to the public. We're going to be sending out our room instructions to everyone in the Earnings Beats Digest. So if you're not already a subscriber, that's a free newsletter, comes out Monday, Wednesday, and Friday. Just go to earningsbeats.com, put in your name and email address, hit subscribe, and we will make sure we get those room instructions out to you on Friday morning. It'll probably come out sometime 8 or 8:30. That's about the time that the newsletter typically goes out. And again, that war room session is going to start at 10 a.m. The topic is going to be scanning against chart lists. So we have a number of chart lists that our members download into their StockCharts account. So it's helpful if you're also a StockCharts member, at least extra or above. And if you are, and you're also an Earnings Beats member, you can download our chart list right into your account, which is pretty cool, nice feature. So we have a number of these different chart lists, and really they're just watch lists, things that we use to try to identify great trading opportunities. And we do a lot of the homework for our members. But if you want to kind of check things out and see what we do, like I said, it's a free event on Friday, 10 a.m. Eastern, and just go to earningsbeats.com, fill out this form here, just put in your name and email address, hit subscribe. Again, completely free, no credit card, and we'll make sure you get those instructions on Friday morning and come in and join us. All right. Let's take a look at what happened in the market on Wednesday. Dow Jones Industrial Average up 1.5 points, 369 points. Essentially got back all the losses from Tuesday. S&P 500 up 48 points, 1 2/3%. NASDAQ, another big day. We're not far from an all-time high on the NASDAQ. NASDAQ up over 2% on Tuesday, gaining 191 points. Then you had the mid caps up more than 2%. Small caps were up more than 3%. So starting to see a little bit of relative strength there, which is nice. Energy leading the action in terms of sector performance on Wednesday. You can see energy trying to get up above that $40 level. I was talking about this on Trading Places Live over at Earnings Beats on Wednesday morning. And I'd love to see energy get this breakout above 40 and take out all these tops over the last 3 or 4 weeks. That would be very bullish and would just be one more sector that's really starting to behave much more bullishly. You can see we've been trending up above that 20-day moving average. 20's crossed over the 50. 50, that decline starting to slow. It looks like it's flattening out. I don't know, even one of the worst groups in the market, energy, looks to me like it's starting to turn higher, which is nice. Communication services has been on a roll for quite a while. It added to it yesterday, gaining almost 3%. Financials up more than 2%. Technology up more than 2% as well. Industrials up just less than 2%. So all 11 sectors were higher on Wednesday. The one group that lagged a bit was healthcare, but we're going to give them a pass. Healthcare has been one of the strongest groups in 2020 and certainly throughout this pandemic. And so a little bit of underperformance there, not that big a deal. All right, 10-year Treasury yield did drop on Wednesday. You can see it down to 0.68%. Got a couple big reports coming out Thursday morning. Make sure you check those before the market opens. But we've got initial jobless claims coming out, and those are expected to drop. Last week we were over 2.9 million. I think they're supposed to drop to less than 2.4 million. So we'll see whether or not we get a little bit of a drop there in the initial jobless claims. And then at 10 a.m., we'll get existing home sales out for the month of April. They are expected to drop quite a bit from March, but that's not too surprising. April was pretty much a stay-at-home month for most parts of the country. It's kind of hard to sell your home if you're inside your home. Hard to get anybody to come over and look at it. So anyhow, that's what's on tap for Thursday. And we'll see whether or not like I said, the rally from Wednesday can continue on to into Thursday. All right, let's move on to talking technically. Talking technically I wanted to look at the consumer discretionary area. Now, technology, healthcare have been great areas. Here's technology relative to the S&P 500. But what had been lagging up until, several weeks ago was the consumer discretionary group. And you can see from this relative chart, consumer discretionary until the latter part of March was really struggling. And look how fast this group has gained versus the S&P 500 over the last, maybe 7 weeks or so. We are about to break out to a new relative high above where we were in September of last year. I know this seems impossible with some of the economic news that's coming out, but keep in mind, stock market is looking beyond the current reports. Stock market's looking out, and it's looking out and it's seeing a recovery, and it's seeing a quick recovery based on what the charts are saying. Now, there's a lot of folks saying, well, it's going to take us forever to recover. It's going to be a U-shaped recovery, or, we got the Great Depression coming. I have not been saying that. In fact, I believe that this is going to be a pretty quick reversal. It already has been. And I look for new all-time highs later in 2020, if not on the S&P 500, if not in 2020, certainly into 2021. But I think there's a good chance we're going to go higher in 2020 across all of our major indices. All right, so in consumer discretionary, what the heck is going on with this big move up over the last 7 weeks? Well, we know broadline retail, specialty retail, autos, and some of the other areas were doing pretty well in consumer discretionary, but it's the laggards that have all of a sudden started to do much better that is starting to get me encouraged. For instance, let's just go through some of these. First up, the hotels. Hotels today closed at a new high, taking out that late April high. Just barely, but we did close above it. And what we're seeing now is a higher high, higher low, higher high, higher low, and another higher high. These are indications of an uptrend. This is not an indication of a downtrend. Now, do I think hotels are the best area in the market? I do not. I think it's going to take a while for folks to begin traveling again, vacationing. I think the hotel industry is going to be up against it. But I think slowly, the chart is showing that we're probably going to begin to slowly recover later this year. That's what the charts are telling me. So anyway, it's nice to see hotels breaking out to a new closing high. How about restaurants? Restaurants across many parts of the country were closed, open only for takeout. We're starting to see them slowly open back up again. Today was the highest close we've seen since all the way back in early March on the way down. We haven't quite taken out the intraday highs and the opens from late April, but we are definitely looking to make a breakout here, and I wouldn't be surprised to see that coming very quickly. So we're seeing some nice strength in the restaurants. Clothing and accessories. Now, clothing and accessories hasn't made the breakout, but we have been seeing this pattern of higher highs and higher lows. So watch for this one. If we could break out above about 253, 254 on a closing basis, that would set a new high, and that's only about 4% away on this group. And you can see over the last week or so, we've come all the way up from about 214 to about 244. So we've already come up, maybe 13, 14% just the last week. What's another 3 or 4% getting that breakout? So watch clothing and accessories. Next up, recreational services. I didn't think I'd be talking about this one and threatening a breakout anytime soon, but another one that's had a really solid week. Still got some, got to get through this double top up at about 66 or so. We're sitting at 59. So another, 12% or so to get there, 10 to 12%. I wouldn't say we're going to make it anytime soon, but recreational services certainly improving. Back up above their 20-day moving average, the 20 days above the 50. Just saw the PPO go positive. I mean, this is one of the worst areas of the market, and all of a sudden, this group isn't looking quite so bad technically. Again, I wouldn't rush out and buy myself a cruise line. I think it's going to be a while, but the group is starting to look better. And the point here is that all of these bad groups that had been underperforming for a long time, as they all begin to perform better and start looking better on the charts, you're going to have more technical buyers and fewer technical sellers. And that's going to make it very difficult for this market to go down. If the laggards start to look good on their charts, then it's going to make it very difficult to take this market lower. All right, a couple more. Let's look at travel and tourism. Travel and tourism broke out just a couple of days ago. So this would have been back on Monday, and we've continued that breakout here over the last couple of days. So again, you got another group. Travel and tourism had not been strong for the last 3 months. And the last 2 months, this rally's been nice, but it's still been underperforming. It's been moving lower versus the S&P 500. But on an absolute basis, we are starting to see more and more of these types of breakouts. How about gambling stocks? Again, these are all groups in the consumer discretionary area. Gambling stocks making a breakout. So higher highs, higher lows, another breakout here, 20-day above the 50-day, PPO positive. Hard to get too bearish right now. Home builders have been strengthening for a while. This looks like a pretty good group to me, and why not? Interest rates near historic lows. The economy, if the market's right and the economy begins to strengthen, this is a group that should do extremely well with low interest rates. So I completely understand why this group is performing much better of late. Next up, footwear. Footwear, after consolidating for the better part of about 5-6 weeks, makes the breakout, closing today above 1650 after threatening that level on multiple occasions the last 3 or 4 weeks. Today we got the breakout, Wednesday that is. Again, I am pre-recording this for Thursday morning. So here is your breakout on Wednesday above that level. I think we're going to go up and challenge about 1710 to 1720. And if that level fails to hold us back, I look for footwear to make a run up to the recent highs back in January, February. All right, how about DJUSBE, which is business training and employment agencies, breaking out above that 115 level. That had been a tough area to get through. We closed at 115.96 on Wednesday. Higher highs, higher lows. Again, PPO strong. I think you can see going through, and these were all areas that were lagging, not just on a relative basis, but even on an absolute basis. We just couldn't get the breakout on some of these groups. Next up, durable household products. Not quite making the breakout, but we're right on the cusp of a breakout. And I'm going to wrap this one up with auto parts, DJUSAT. We did come up and close at a new high on Wednesday, 362.34. PPO strong, trending higher, higher highs, higher lows. I think you can see why consumer discretionary has been outperforming now for the last 6 or 7 weeks. Because what I'm showing you here, these are the groups that are struggling. I mean, we could go through and talk about some groups that are doing extremely well. How about broadline retail? I mean, this was the February high. Look where we are. We've broken out a couple of times. Amazon leading the charge there. How about specialty retail? Specialty retail has broken out above the February high. So these were groups that were already doing well. And now we've got a lot of the others piling on. Consumer discretionary, certainly looking much better and looking much more bullish, showing many more bullish characteristics on those various charts I just showed you. All right, let's move on. Scooter report. I'm going to show you a little bit of what I do with the scooter report. Actually, I do a lot with scooters, but let me just go over a couple of things that you might want to check out sometime. Actually, I don't want that. Let's go back here and try this again. All right, so over under member tools on your dashboard, you can click down here, just go all the way down. It's below summary pages, scooter reports, click on that. And then what it's going to do, the default is to bring you up large cap stocks and should be in scooter order. Now, if you're not familiar with scooters, that's an acronym, StockCharts Technical Rank. So it was developed by John Murphy. It's a formula. And like anything else, it has its limitations. I can tell you that this is essentially a short-term relative strength indicator. And relative strength, when I talk about relative strength, I mean against its own asset class. So large cap stocks, you're talking about how do you rank against other large cap stocks looking back over roughly the last 5 months. There are short-term, medium-term, and longer-term indicators in this formula. But when we say longer term, I'm talking about 5 months. So when you maybe 5 to 6 months, I don't think it goes out beyond 6 months. So you could be looking at a stock that over the last 6 months has been incredibly strong. Prior to that, could be downtrending for 10 years. But if it's been strong the last 6 months, it's going to get a favorable StockCharts technical rank score. So Dexcom, DXCM, 99.9, that's the highest you can get. And that stock is ranked #1 above all of the other large cap stocks. And to get a sense of what that looks like, take a look at the chart. I mean, it just keeps going up, 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 up. It's had a great run here. And then you could pull up a weekly 5-year and get a better handle. I mean, this stock didn't do much for a few years, went sideways. But if we're just looking at the last 6 months, 5-6 months, you can see why it's ranked #1. We've gone through a pandemic. And while we've gone through a pandemic, this stock, well, back at the beginning of November was 150, and now it's 400. So, and that's after the pandemic. Pretty powerful move. So, if you're looking to try and figure out, hey, how can I find some of these leaders in the market? Scooter Reports is one place that I would certainly start. NVIDIA, they report their earnings tomorrow night or Thursday night. And that's going to be an interesting report because NVIDIA, one of the highest ranked. Look at NVIDIA making breakout. Keeps moving up to new highs. Very strong stock. Let's see. What else do we have? Well, Newmont, that's in the gold mining area. I'm not a big fan of gold. I think in the short term, it's fine. I'm just concerned that if fear continues unwinding and the market goes higher, fear is one of the things that really drives gold prices. And gold prices, of course, have a positive impact on gold mining shares. So I just think the market, I think we're in a secular bull market. I think we're going to go higher. I think we're going to set new all-time highs. And so I just don't think that Newmont Corporation 6 months from now is going to be looking nearly as strong as it does right now. Just my personal opinion. But then you got some other names in here. Fortinet, very strong technology, software company. Regeneron Pharmaceuticals, one of my favorite biotechs. PayPal, ServiceNow, Chipotle, done just an amazing job, even though it's been in that restaurant space. Netflix, of course, that company certainly is being benefited to some degree by the pandemic. Everyone has to stay home and watch movies. So you can kind of get a sense for the strongest stocks in the market. Now, another thing you could do is look at the change. So this is just ranking them in order. But what if you want to find something that's starting to show a lot of strength? Well, if you click on the change, that's going change the wrong way, going down. But here are some stocks that are coming up. And I'm going to be talking about 2 of these, I believe. I'll give you a little hint here. These actually all 3 of these stocks right here, the top 3 changers in the scooter rank among large caps. These are all 3 of the stocks I'm going to go over in the 3 you must see at the end of the day. I didn't even know that. Pretty interesting that I picked those 3. But these are the 3 largest changes in the scooter ranking on or among the large cap stocks. So we'll take a look at those charts a little bit later in the show. But this gives you a sense of what changed today. Now, what if you want to say, okay, well, what's been moving up this week? Well, you can change this period over here to 1 week. Now you can see that Fortune Brands has gone up 38 points. So that was from 53 to 91 just in the last week. So what does that chart look like? Well, you can see what's happened here in the last week. Beautiful bullish engulfing candle right off that 20-day moving average. And then the stock has just soared back to the upside. That is a very, very nice looking chart. And just taking one glance here, at what's happened this past week, I think will give you a sense of why the scooter has changed so much in this past week. All right, let's keep moving on. And by the way, you could just change this mid caps so you can quickly see what's been moving in terms of the mid caps over the last week, and then do the same thing with small caps. There's a company that's gone from 12.6 to 92.6, a software company. Funware, let's see what that chart looks like. Wow. Well, it's mostly because of one day, not this week. But yeah, I mean, when you get a big move like that, all of a sudden, if you go back and you study the formula for the scooters, you're looking at rate of change, and rate of change playing a big role in that formula. You can just imagine how fast the rate of change just changed for Funware. Does this mean that this is a great stock? Well, I don't know. One day's trading isn't going to convince me. This is not the kind of trade that I would make, but it does alert you to the fact that this company on big volume had a huge day today that you wouldn't have known otherwise. So you need to maybe put this as part of your routine. Come on in, check out the scooter reports, large cap, mid cap, small cap. And hey, if you like ETFs, check out the ETFs and give you the 1 week rally on some of these different ETFs. You can see there's the home construction iShares. Scooter's score's gone up 45 points this week. We take a look at that chart and you see why. It's very similar to the home construction index I showed earlier. All right, let's keep moving. I want to get into some earnings reports. So these were earnings that came out Wednesday evening. Before I get into them, I do want to tell you that Thursday before the bell, so as you're listening to this program, you should be able to check on Medtronic, MDT, TJX, Hormel, HRL, Best Buy, BBY, and BJ's Wholesale. BJ is the ticker symbol there. Those 5 will all be out on Thursday morning. Tomorrow after the bell, so Thursday after 4 o'clock Eastern, NVIDIA, Intuit, Ross Stores, Agilent, Splunk, Palo Alto Networks, Hewlett Packard Enterprises, and Deckers Outdoor all will be reporting. So tomorrow actually is pretty busy earnings day. Things had started to slow down after the big rush of earnings a couple weeks ago. But earnings, pretty steady group coming in tomorrow. So make sure you check those out. So what happened after the bell today, Wednesday? So these are things that are going to be impacting your trading world as you open up on Thursday morning. So let's pull up some of these charts here. First up is Synopsys. They beat bottom line $1.22 versus 99 cents. The stock was pretty much flat after hours, and you can see we are right at a key area of resistance. February high 165, and that's right where we closed on Wednesday. So will we make the breakout with earnings? Not really giving us any clues in after hours action on Wednesday evening. Next up, ZTO Express. Accumulation distribution line looks good. Stock's been on a roll. They did miss. They came in 12 cents versus 27 cents. The stock was down about 4.5% after hours. I'd still watch that 20-day moving average, though. I think if we get down to that 20-day, we may see some support there. CPRT, this is Copart. Copart missed on their earnings, 58 cents versus 64 cents. Stock is down 3% after hours. Overall, I think we're starting to see at least some improving action here on their absolute chart. As far as relative strength goes, they are in the transportation services area. You can see overall not bad relative to their group, and they've been strengthening versus the S&P 500 last 3 or 4 weeks. So not a horrible looking chart, but stock is down 3% after hours. This is another one where you might want to keep an eye on that 20-day moving average. All right, here is a blowout report in after hours, and the stock is down. A little surprised, but not really, because a lot of it was built in. But Take-Two Interactive, they're the ones, they've got the 2K, that NBA 2K game. They've also got, what's that auto crash game, or Grand Theft Auto. Those 2 games, apparently they're getting a lot of people interacting in both of those games, but they did announce that they're not going to have very many games out for next year. So that may have been what caused the pullback. I think it's an opportunity, though, honestly. Looking at this chart, accumulation distribution breaking out, the stock breaking out after a long period of consolidation. Down 4%, 5% after hours. They came in with earnings of $1.66 versus 88 cents expected. That is a massive beat. And now we know why the stock was 118 3 or 4 weeks ago, and it closed at 146 going into earnings. Market was already anticipating the news. We get the news, probably going to see a gap down. I think we could see something down into the mid 130s, maybe even the lower 130s. If we get down to that range, that would be a good area for entry, in my opinion. All right, Expedia, EXPE, they missed, big miss, $1.83 loss. They were expecting a $1.18. The stock has broken out though, and it is up after hours, up 4.4%. So I think the market may have said, hey, we've already priced in all this bad news. We don't care about what just happened in the last quarter. We see things improving down the road, and I think that's why we were seeing the stock up. I think even if it does gap up, my guess is you'll be able to get it. You'll have a chance to get it in or get into it a little cheaper. Just one more here, actually two more. NDSN, Nordson, they beat $1.58 versus $1.28. Stock was up about 1.3% after hours. Can we get through $1.80? That's going to be the key. I'd really like to see an open above 180. If we gap up and then try and test 180 and fail, I think we could come all the way back down to the 20-day. So be careful with this one. Although, again, a open above 180, I think would be bullish. LB, this is L Brands. They had a horrible report as well, down 99, or excuse me, their earnings were 99-cent loss. And the market was expecting a 50-cent loss. So almost a double of the loss that was expected. Stock is up about 0.2% though. I don't know. I don't like the company. This one is one that really still is struggling, trying to get through its 50-day moving average. I think this one's still got a lot of problems ahead of it. I would personally avoid LB. All right, let's see. Let's go into the three you must see. Got three stocks. Need to give you these pretty quickly. So let's take a look first at Keys, which is Keysight Technology. Nice breakout here today. I really like this. And in fact, if we were to go and look at a 2-year chart, you can kind of see a little bit of an inverse head and shoulders with the high here coming down, putting in a left shoulder. There's your neckline, head, right side of the neckline, slightly higher, back down into a right shoulder, and then we break out and look at the volume tick higher on this breakout. That breakout would measure at about $23, $24 from 102. Talking about a measurement up near around 125, which would easily surpass its 52-week and all-time high. So I think Keys looks pretty interesting. Next up, how about ALB, Albemarle? Albemarle, sideways consolidating here for the last, 6-7 weeks. Couldn't get through 67.5. Well, we did it on Wednesday, 68.14. ALB breaking out. Volume started to tick higher. I wouldn't be surprised to see a little bit more positive action here. And then let's wrap this thing up with ADI. This is Analog Devices, another one that's been trending higher. They came out with their earnings. Market liked it. They broke out to a new high for the last couple months. I see this one moving up to that 125 area. I wouldn't be surprised. All right, that is it. Again, go to earningsbeats.com. Check out this subscription for Earnings Beats Digest and join me Friday morning, 10 a.m. over at Earnings Beats. We'll send you room instructions to everybody that is a subscriber. Everybody have a great day. Happy trading on Thursday. Take care, everybody.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.